Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar still continues to hold within the range of 76.90 to 78.15. After Friday's strong decline, we can see that the technical implications are still negative and still potentially holding for a down test. But the key level of 76.90 still has to be broken, and a close under there from a New York base will give further indication towards the downside around 76 or maybe even towards that level of 75, 85, 95. From the given technicals breaking down, especially with the MACD2, does hold that scenario to the bearish case. We're still holding to a negative outlook when it comes to the euro after the bullish divergence supported the bull run for the US dollar, which measures the greenback strength against a basket of six major currencies, that is, to the dollar index, where the euro weighted at 57.6. Therefore, if the dollar index continues to rally, then I am looking towards this bottom side target around 119.90 or even lower towards that 118 region. Technically, though, we are very much in line or in sync to the bearish scenario. A little bit of a hesitancy, that is, to the dollar yen case as it approaches the 109.90 to 110.10 resistance. We can see, though, there is a bit of a weak signal with the MACD, but overall we shouldn't discount one more up test and see whether we can break or get another strong rejection from that top side. The pound will approaching up to the Super Thursday, with the Bank of England likely to see no change in interest rates and they announce their decision. But from a technical point, we are breaking down, and I do anticipate we are still looking towards that 136 to 137.20 area since that recent rejection from that one high 139. Sterling yen, I do like the pattern to support a bearish case. And if the market does to edge up a little bit higher, then there is good bearish divergence from the RSI that supports a decline that I believe will eventually get towards that bottom side of 148 to 150 area. A strong rally in gold overnight after Fed Chairman Jerome Powell added a few comments in terms of the economic recovery in the US. Still, the market was contained by the resistance of 1,800. And still presently, from the technical point, still remains vulnerable to the downside. I'm still holding a view to around 1,760 or to 1,746 while the top side caps. Finishing up with oil, well, there's still a bit of a whipsaw price action here, but not quite clear in the top side of this $64.80 level. Now, if we do get a close above there, 67's on the agenda, but I feel that the bears are still protecting this move and therefore could see a pullback to this trend line seen around about 61.80. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.